Hi, Dean Jenkins with FollowMeTrades.com, and this is the weekly market update for the week coming up of August 29th, 2016. Wow, Labor Day holiday is almost on us. The end of summer is creeping up here. But let's take a look here at the market. Something pretty interesting is going on right now. So I'm looking at the S&P 500 daily chart, and look at this red pyramid. This is calling out a lower low, lower high, new low sequence up here. Now we had talked before about an Elliott Wave count that we've got going on here, 5 waves. So this is 1, 2, 3, 4, and into 5, and that this wave 5 had hit a projected target zone right here between these green lines. So it's right in this target zone where we kind of projected that it would go once this post-Brexit rally resumed here. It looks like we might have hit the target zone and might, I stress might, be heading down a little bit. Now we do have what's called support, a level here that the Ichimoku cloud is projecting that price may go down to, maybe even into, as it goes down into this and then ultimately reverse back up. That's what it's projecting at this time. Now these levels are not exact. That's just a scenario that could happen. So at least in the short term, we may be setting up for a pullback here on the S&P 500, the broad indexes, and that could be interesting. Let's look at a smaller time frame chart and see where that might go to. So now we're looking at the S&P 500 Futures contract on a 60-minute chart, and we've had 5 waves here as well. We had this is all 3, 4, and then 5, once again making it into a target zone already. Now what happens after 5 waves? Well, typically it's a ABC pattern. And we've already got the A here, we've got the B, and so we could see another C, similar to this right here. Now it's been pretty sharp, but we could see it. Now we have a hard time establishing a price target for that at this point, but that could be, we could continue this down move now for a while. That may be tradable in the short term. Now, does this mean that the bull market's over and that the S&P 500 is finally going to correct? Not necessarily. This could just be a short-term pullback, and on the daily charts, we could eventually go on and make new highs. But it does look like we're setting up with a short-term pullback, and we do have, this Dow theory, lower low, lower high, lower low, lower high. Bit of an anomaly here. The news coming out of Jackson Hole, but on a bigger picture, lower low, lower high, new low, really telling us that we're probably going to pull back just a little bit for a while. So that may be very tradable, and we're actually going to trade that next week. We're going to be taking some trades that would be profit if the S&P 500 does go down. So I'm back on the daily chart here, and just to reiterate, I'm not saying that the big correction is happening yet, but more likely a smaller pullback. We could start the big correction at any time, but it really does again look like we got at least a short-term pullback coming, and that's tradable in the next week or two, and we're going to be doing that. All right, let's take a look at gold and oil as always and wrap it up here for the week. So I've been saying for a number of weeks now that I think gold may have found its top in the near term, and that really sure does look like it's playing out, doesn't it? We've had a lower low, lower high heading into new lows here pretty quick. It's down, it's penetrated the cloud. Pretty good chance it's going to go through this cloud now. You see it's getting thinner and thinner. So some volatility coming for sure. We'll have to watch this, but I certainly would not be going long on gold at this time. Now once the big market correction does start, eventually, sometime in the future, we'll probably see another rally in gold, and we'll be watching this closely and giving updates. But I would not be going long on gold right now. It's heading down. It may have found its top. It went right into the price target we had called out at the beginning of this year. Made it there perfectly. Let's look at oil. So oil is pretty exciting. Again, we called this recovery back at 37.09. It went up to about 54. We knew there would be a pullback. We got it here during the summer. It went pretty deep, a little bit deeper than expected, but it did not break the rule. It stayed above a Fibonacci retracement of 76.4, which would have thrown this analysis off, and now it's rallied up off that level, and looks like it's going to take this next leg, which could be just like this one right here. And it's broken above the Ichimoku cloud. The cloud's narrowing. So if it continues, and we've got really nice higher high, higher low, higher high, higher low. If it puts in another high up above the cloud here, then the probability just increases even more greatly, and we're going to be taking some energy related trades here this week as well. Well, that's it for this week. Again, we may be putting in some lows, short-term lows on the S&P 500, the broad indexes. Gold looks like it's done. Not too early to be shorting it, but certainly no long trades on gold. And it looks like oil is off to the races here on the next leg up, which could take us pretty high. Well, be careful, trade safe, and come back next week for our update, and we will continue to keep it coming here as the story tells itself on the broad markets. Thanks, and have a great week. Bye.